Just very quickly, first about BNP Paribas Real Estate. We're based now in 17 countries with 17 alliance networks across the world and 2 platforms in Asia and the Middle East. So we have a good coverage of Europe with a global footprint and linking with the bank. In terms of my role, I was just doing France for about 15 years, investment into France, and now I do a cross-border role, bringing capital from the Middle East, from Asia, and from the rest of the world into Europe. And obviously, France is our headquarters, so one of the largest markets. And as Richard mentioned, so I'll just do a few slides on Europe, and then we'll delve into France, and then we'll obviously sit down with the experts on the French side. So in terms of the investment market in Europe, still strong, down 3%, but 256 billion euros is still an impressive figure. A huge amount of capital wanting to get into all the European markets. I think that the big trend, and as you can see with the drop in the UK market, has been that in the past, before Brexit, investors would go to the UK first and then look at continental Europe and especially the big German cities and Paris. Since Brexit, those 3 markets have been a lot more aligned, and there has obviously been the drop in investment volumes in the UK. Germany, although it's stable in the 3rd quarter, is going to have a very big last quarter. Deals like a Millennium Portfolio and some huge deals coming in to boost their investment volumes. And France has been extremely strong, and we'll obviously come back to France. In terms of other European markets, I think that the drop in the Netherlands was more for the fact that last year was a record year, almost 20 billion euros, some NPLs from the crisis being resold there, but there's still a huge amount of appetite for Netherlands, for Benelux, and for other European capitals, Spain, Italy, and Poland. More lack of supply than lack of demand has been the drop there. Prime yields, as we see, have dropped everywhere, with just the exception of London, and I think Paris will see in the last quarter there will be another drop because there's some very core assets being sold at the moment, but at levels that we've never seen before. 3% for central Paris, as I say, we're probably seeing some deals even better than that now. 2.6% for Berlin, some really low figures. And I think what's probably interesting there is now we're seeing a kind of reverse spread with London, whereas London was usually similar to Paris and Germany. We are seeing higher yields there. Last deals on St James's Square are close to 3.5, 3.6. So despite Brexit, there are investors that are looking to now get back into that market. In terms of a quick slide on office rents, and obviously we'll delve more strongly into Paris, but I think what that clearly shows is how strong Berlin has been. It's a market that has absolutely transformed since the falling of the Berlin Wall, and they recently had the 20-year anniversary, and those rents have just grown hugely. So it's probably been one of the hottest and most exciting markets in Europe. London obviously had that fall since the vote, but when you're actually in that market, it's not as bad as it seems from the outside. I was with some West End brokers recently, and they just couldn't find anywhere to let in the real core West End. So it's not as bad as it feels from the outside. And then most of the other continental European markets have seen more of a steady rise since 2014, 2015 in office rents, with improved GDP and with very low vacancy rates. So where's the capital come from? So this is a slide that's just showing where the investors are coming from across the globe into the whole of Europe. We've got a couple of things further on France specifically. So firstly, European cross-border investors. Sorry, just to go back, I mean, of the whole investment volume, roughly 50% of investment volumes in Europe are from cross-border investors. So a huge amount from Europe, mainly the Germans and the French. The French have finally, I'd say, started really moving out of France, and we've been seeing some big deals by well, not all, but a lot of the bigger French investors, more in continental Europe, probably less in the UK at the moment. The German story has been really important, and I think the huge inflow in the German funds has seen some massive deals in France, in Europe, and obviously Union have been part of that. After that, Asia Pacific, a huge rise, and I think we'll come back to this, especially from South Korea. I think everyone's seen this huge wave of South Korean capital that's come to Europe. Latest figures, I think, are around 13 billion euros, and of that, almost 5.5 billion in France itself. So we'll come back to that. There's also a lot of activity from Singapore. GIC are now definitely back. There's the likes of Capital Land, Frasers, other big Singaporean investors. We're seeing some Hong Kong investors also with, unfortunately, the recent troubles really look especially into London. A couple of the latest deals have been done by them. Coming around to the Middle East, it's a drop. There's more been sellers in Europe that we've seen than actually investors. Some of the big, from the sovereign wealth funds down to the privates, have thought, this is a good time with the market strong. But we are still seeing active requirements and active investors from that market. And US and North America still just about one of the biggest outside Europe, the biggest investor. And everything really from value add up to core funds from the US and North America active in Europe. So just going a bit more into France, where we've seen investment. This year should be a record, should be around 35 billion euros investment in 2009, a decent third, and it should be a strong fourth quarter. Traditionally, office has always been the strongest, usually 60–70% of the market, and that hasn't changed. And we'll see later. There's been some huge office deals in France, in La Défense, in central Paris. Retail's been stable, and I think interestingly, retail's not. We haven't seen it hit as badly as in the US or as in the UK, and the high street is holding up better. There are still some of the the issues with the e-commerce, especially if we get out of town for some of the secondary shopping centres, but not quite as bad as some of the other European markets. Logistics, same story across Europe. Really the strongest asset class that we've seen, and a huge demand for logistics, really due to that e-commerce story. In terms of other parts, other bits of the market, residential market strong, huge portfolio by SNCF, for instance, recently, and it's becoming more and more of, I'd say, an institutional asset class in France than it was a few years ago. Yields driven down across the markets, and especially in logistics. We're seeing, as I said before, yields at rates that we've never seen before, and this is a trend across Europe. And the discussion we'll probably have after is how far has that got to go? And I think if we were about sort of 6 months ago, we would say, okay, that's pretty much there. And then we saw that huge dip again in the 10-year bonds, and that spread moving out even more. And since then, we've seen more and more deals at levels that, again, we'd never seen again. So I think that's more of a discussion for later. But what's interesting is, you still have that spread, and there is readily available financing, as a lot of the people in the room will say, from especially the French and the German banks. Just a quick mention on the regional markets. I mean, outside, I think the general trend, I think most people knows, is 70–80% of the investment volume is Paris. It's a very sort of dominating city, 30% of the GDP as well. But outside Paris, I think Lyon's become more and more of a recognised investment location, and there's seen some very strong take-up. Lille as well, I think, especially after the Eurostar arrived a number of years ago, has become another recognised market, and the other regional markets are generally strong and often helped when the train arrives, like Bordeaux, that had the TGV opening about a year and a half ago. So just to come back to Paris now, and I think it's going to be kind of the main focus of the discussion. I mean, I think most people sort of know the market well and know this graph well, but a quick kind of look on some of the main areas. I think a couple of trends which I always find interesting. Paris is twice the population density of London, which I always found that quite surprising because there's no high rise in central Paris, but it's a very dense city, quite similar to Manhattan. In terms of population density, so everyone wants to be right in the centre of Paris. There's a lot of people that's living there, and because of that, the office and retail markets are very centralized. You know, it's a small historic CBD, and we're in a great building here as part of it. La Défense is only 10 minutes outside Paris. 3.5 million square meters office space. And then after that, there's a whole number of office markets that takes years to know each one. But the general trends is if you're close to the river, if you're close to the transport links, if you're on the way to the airports, that's where you're going to see a number of these office space springing out. And like most European capitals, you have that east-west trend, due to historically the industrial buildings being in the east. So more wealth is to the west, and there's more part of the office market there as well. A big trend that's obviously very important and a real big selling factor for Paris at the moment is the Grand Paris. So this is a huge, one of the biggest infrastructure projects in the world. Almost 24 billion euros is basically being spent on improving the transport system in Paris and putting two linked railway systems that will link to what is an already very good transport system. There'll be 68 new stations. This will take 15 years. It's a drip feed. It's not like Crossrail that's just arriving. This is going to take a long time. And we're already seeing parts of the market that have been completely transformed. I mean, if you're in the likes of Saint-Ouen, Clichy, going up to Saint-Denis, those were markets where they were fairly secondary, and now you're seeing rents that have increased hugely. You've seen parts of the towns being transformed, especially where the line 14 has already opened. And one of the big parts to that as well is the fact that the French won the Olympics in 2024, and there's going to be a huge amount of of infrastructure put in, especially around Saint-Denis, just by the Stade de France, and this is just some details of the future Olympic Village, and there'll be a huge transport hub right next to that as well. So the idea of the Grand Paris is it's not just central Paris, it's people moving and living outside Paris and also being able to go from one suburb to the other instead of having to come into central Paris as well. And that will have a real big boost on the market. Couple of stats just on the office market. So we're seeing there's been a big drop in vacancy rates. So strong GDP, or good GDP, I wouldn't go as far as strong, but good GDP figures has seen the economy picking up, has seen a lot of tenants coming in. There has been a bit of a Brexit effect as well, although Paris, I think, shares that with all the other continental European cities. And with that, we've seen a strong fall in vacancy rates. And what's always interesting on this side is the part of new compared to second-hand. And again, a general trend in Paris is, I think the stat is 50 or 60% of stock is over 20 years old. So it's very old office stock in Paris. And that, again, is interesting for investors that are looking to redevelop or develop new. And if we go into each separate Paris market, we see the average vacancy rates in pink, and then we see where they are now. So all across the markets, they're way below the average, and especially in central Paris, where you've got figures of, as you see, sort of under 2% in the CBD. So this, with the economy, has generally driven rents, and this is a line of the office rents in Paris, and especially CBD. You've seen a lot of occupiers coming in. There's been the WeWork phenomenon as well, and I'm sure that'll be a question later. You know, what's happening with them? What's happening with the service offices? Has that driven some of that rent to that level? I mean, I would say probably not as much as, say, London, where there's a huge percentage of service offices. There's a big percentage in Paris, but there's also a lot of other strong tenants that compete for these really prime buildings. And then generally, as I say, in terms of most markets, you've seen a good rise in office rent. Quick look at a few of the big deals that have happened in terms of what we've seen over the last few months. And I think coming back to that, maybe starting with that South Korean story, like I mentioned, about 13 billion euros and almost 5.5 billion invested in Paris over the last 18 months. So a huge wave of capital and 2 deals there, Lumière and Mujunga, both done partially with South Korean investors, and Tor W, so different type of investor, Ares, US more value-add money, also buying in La Défense. So there's been a real spread of capital across the globe looking at the Paris market. And as I say, investors that probably weren't looking at Paris before and might have slowed down a bit in London and have come over as well. So we've done a quick couple of slides on how we're thinking France is compared to UK and Germany in terms of capital values. So this is an estimation in terms of rental growth and in terms of yield compression, in terms of the different market. And it shows fairly clearly that Germany and France have had some really strong capital value growth with that rental growth and with the fall in yields. UK has struggled, but I'd still say, despite that, you know, there's a lot of investors waiting to go and waiting to pick up what I think will be some great deals in that market over the next few years. And interestingly here, you see the Lyon's really performed extremely well with some rental growth and with more international investors. Quick one on where the money's come from, and I think this for me is a slide where we very rarely seen this for France. Usually, domestic investors are 50, 60, sometimes 70% of the market. As we see, the orange part of the graph for France is Asia Pacific, which is really showing that wave of especially South Korean, but also Singaporean money coming into France. And then you have the rest of Europe, and that would be where you have the domestic, and then the Eurozone is a small part. But as I said, I'd say that wave's not potentially over, but we're also seeing a lot of French and German investors now coming back and competing in the market, and we're seeing how that, and this shows how that compares to the UK and Germany. We've done a quick slide, and this is very much an estimation on what we think the returns are in France compared to the UK and Germany are. So a net initial yield 4%. Yes, it's now impossible to get that in the CBD, so probably thinking more out on a La Défense or outside Paris. Rough loan to value, rough senior loan rate, and where the cash and cash are. So you are still, even with low yield levels, getting good returns in the French and German markets, and UK with the lending rate a bit higher, it's not quite the same returns. But again, very much an estimation.